Oh, we got lobster? Yeah, we have talked about that.
Oh.
Cool.
No bite.
What? So what's it, man? That little pinch, you know, for that presentation, here, told me she saw me waiting this. Oh, that's okay. She doesn't sit there like, all right. Oh. You saw your shoes. Because you sit down, you know. Oh, yeah, because she said, like, yeah, I'll leave over to you. Imagine someone came every time that she told her what they go to and don't. It's like ice. I might honestly. I show up Saturday morning. You can just willing to sit there. 4 or 5 seconds. We need to do it. I can't have one. Yeah, that's right. But then if you just don't have the contrast, right? It's great. Except flat screen. Have a button video like Jesus. Minus 20 yes. Visual bar minus 5. Make sure you orally sign. According to the. Oh, yeah, one source. See if the loop, I think so. Actually, I'm making for a bad speech. Right. This was just. Good. No, actually, I thought of a lot of these and then I did some research. Yeah. And this is what textbooks. This is what textbooks are good. Like your history. That's interesting. Have some at home. Regular tablet is very expensive. No, first hands on. It's like a different thing. There. Muscles. Then that's what this is. That I'm used for. It's good that you have a little while. See, that's what I'm gonna choose the introduction of. And then for every single thing of this, I'll give an example. And, you know, same thing as this. This, I'll just do the same. Hi, you are, I think I'm.
I'm gonna need help with live text. Okay, guys, does this wrap it up for you today? Last class of the semester, right? And then we gotta take an exam, and that's it. Now your exam is next week at what time? I was sharing that, but I'll make sure I'm sharing it. Okay, I guess it's sharing it. Is this your last class of the semester, Clayton?
Say that again?
Is this your last class of the semester?
No, I have one more.
Oh, Monday, Wednesday, Friday? Okay.
9 a.m.
Yeah. The exam is what, next Thursday at 10 o'clock? Okay. And any of you got started on your problem yet?
Yeah.
You downloaded the forms? You have, Jonathan?
Yeah.
Cool. Okay. That problem shouldn't give you too much pain. Now, I think I just put 40 questions. Now, these 40 questions, true, false, and multiple choice, I think they'll be easier than the second test. Now, the second test is another story. 3 of you got to redo your multiple choice. Of course, I can't take if you redo the true, false. Obviously, if true is wrong, false is your answer. But what I'm thinking about doing, the grades on those things were bad. I'm thinking about just putting 20 points on your first grade as a curve, or just not counting that second test at all. Now, all of you had good grades on the first test. So if you make a good grade on this final, that probably will be your 2 grades all count. Plus, your problem now is a big part of this final. So do that problem. Let me find some solutions here. We're going to get out by at least 1:30 today. I've got an appointment with the provost. He's new, and he's tried to meet with every faculty member for half an hour this semester. My time today at 2 o'clock. Of course, I don't know if since I'll probably be leaving in May, he'll probably want my opinion on a lot of things. And this new dean, I'll definitely give him my new opinion on who I think he should hire as a new dean. Okay. So I'll put a plug in there. We had this guy yesterday, I think I told you about. I found out more information about him. He has 2 PhDs, MBA, and he has a law degree. He's about 47, so he must have been in college about all of his life. So, and he was in the Army 6 years. So, if you take he's out of college at 22 and he stayed in the Army till he's 28, it would take him 2 years to get an MBA, it'd be 30. Take him a couple of years for each PhD, So he was probably 35 before he went to work. So, but with a law degree, I don't know why he'd want to settle for the salary here. I'd go past the bar. So, but I don't know his ups and downs, but I just, somebody like that wouldn't stay long. They want something to put on their resume. The first thing I want to bring up, all right, I'm going to bring up a test bank. Okay, and this is chapter 8. We're going to look at a few questions on chapter 8 as a review. Now, if you look at these, I go through a test bank and I pick out 40 questions, whatever I've got, I believe it's 40. And the amount of loss realized on the sale of property is computed by subtracting an adjusted basis from the amount realized. That's true. It says loss, the amount of loss or gain realized. It didn't say taxes. A loss on the sale or exchange of property is deductible only if the property is used in trade or business or for investment. True. Stock market went down about 10% October, November. Now, I've got my retirement. Stock market, retirement's up here depends on the stock market. It is our investment for retirement. The stock market goes down 10%, all stocks average 10%. Well, I haven't built up a lot yet, but I know when Dr. Vickers left, he had over $1 million in his retirement. Well, he has to handle that right. Now, if he still had it in up here and it took a 10% hit, he'd lost $1,000. That's a paper loss. A paper loss is not deductible. It has to be a real loss. You have to have a transaction to have a loss. Okay. Now, if he sold some of his stock, he may have not had a loss. It might have went up 20% before he lost 10%. Okay. Anyway, it is on business or investment. Now, if you've got a diamond ring you're holding for investment, you'll take a loss on it. If you've got a coin collection, any kind of hobby collection, you can take losses on. You're holding for investment. I've got a pretty big coin collection. My safe deposit box is probably as big as this trash can, and I can hardly lift it. I've got it full of gold and silver as an investment. Now, the silver is not necessarily silver dollars. I bought bars of silver. Bars of silver. But now the gold I've got is gold pieces. But it's all for investment. Okay? All right. Now, some of that weight is worthless. It's not all good stuff. I may have other coins in there it's not worth what I paid for. A lot of the silver, 50 cents, I paid $6 a piece for, may only get 5 out of it. May not have a gain. Okay, but they're held for investment. Stocks and bonds, if I buy real estate, I hold it for investment. Now, your house, you're not holding it for investment. That's personal property. Now, your computer at home is personal property. You can't sell it for a loss. But if you have a computer at work, if this were mine, I mean, if this were the college's, which it is, if they sold it for a loss, they could take a loss. Business property. Okay? The sale of inventory at a loss results in an ordinary loss. Well, you know, inventory is for your business. Okay, now let's look at a couple other pages. We're now going to look at a page of multiple choice. I want you to read a couple of those. They may be, one of them may be what I picked for the test. Okay? Take a minute and read number 11. All right. This company went bankrupt and it made this stock worthless. Which I wish I could mark on this. It's just not going to let me. Do you see anywhere where it says I can edit? I don't see anything for edit. But anyway, you can see that this answer is a long-term capital loss of $10,000. All right. Let's read a couple more under classifying the losses on the taxpayer's return. Look at number 2 and 3. The destruction of a capital asset due to a casual result in recognition of an ordinary loss. And that's true. Corporation can take the whole ordinary loss. Now, if that was an individual, see, this says capital asset. Now, if you held a building for investment, it's a capital asset. You can take an ordinary loss. All right. One of the requirements which must be met for stock to be considered Section 12, that's that small business stock, is that the stock be owned by an individual or a partnership, and that's true. Okay, now going on to another category. Now this is the one I want you to go ahead and read all 4 questions on passive, because you're not real good on passive losses and gains. Portfolio is investments. W-2 wages, stocks and bonds, real estate, for example. Losses from passive activity that cannot be deducted currently are carried over for up to 5 years. Says false. Does anybody know how many years it is? Says it right here. What does it say, Co? Indefinite. You can offset portfolio income with passive losses. False. Passive losses can only offset passive income. Also false. Okay, that's a little bit about passive, but I want to show you 2 or 3 multiple choice on passive. I want you to read number 17. Salary, income from activity A, B, and C. Activities A, B, and C are all passive. It's real estate or business you don't participate in. All right. Your answer is C. Based on information, Joy has salary of $120,000 and a net passive loss of $30,000 that will be carried over. How you get 30,000? 55, 35 is 90. 90 by 60. You got 30 to carry over. I thought this might be as good a review as any. All right, let's look at number 19. The same problem, no. A, B, C are all passive. Based on the information John will recognize, the answer is D, salary of 120 and net passive losses of 40 that will be carried over. That's 30 and 70 is 100 minus 60. So that's not going to be too hard on you if you see it on a test in some other forms. And let's look at number 23. Lewis died during the year. He owned passive property with a fair market value of 61 and a basis of 48. Suspended losses of 15 were attributed to the property. How much of the suspended loss is deductible on Lewis's final tax return? The answer is B, 2,000. All right. What's the fair market value of the property? How much? Fair market value is what?
61.
All right. And your basis was what? How much of a gain is that? 61, 48 from 61 is how much? 13. All right. He had some kind of losses before at 15. And you can only take 2 of that because you gained the rest in fair market value. 13 from 15 is the 2. Suspended losses deductible to the extent to exceed the increase in basis. All right. Now 24, Mario owns an activity with suspended. Now this suspended, I suggest you look it up in your book and know what a suspended loss is. I'm going to see if there's another category in this chapter. So far, I don't see a category. No, whoops. All right, here's another category. I'm trying to look at these categories in chapter 8 with you, okay? As a way of review. You would deduct a loss resulting from theft of business investment property, but not a theft of personal use property. You may deduct a loss resulting from the theft of business investment property, but not a theft of personal use property. Wrong. Now, it says true. But I'm also going to say it could be false. You know, if it's personal property, this is theft or casualty, and you can take it off as an itemized deduction. But here, on a business, Schedule C, you take it off straight as a deduction. But for personal, it's Schedule AB, itemized deduction. After you take out 10%, after you take out 100. So this is true or false, in my opinion. But now you can only take them if the area was declared a federal disaster area. Did Trump declare California a disaster area? He did. Did he declare Florida after the hurricane? He did. Did he declare what other state was hit before that?
So,
North and South North Carolina, they declared those disaster areas. So people could take their case. They've changed the rules on this a little bit, from 18 from 17. Let's look at a couple of multiple choice. Which is most likely not considered a casualty? Fire is, water damage by water heater is, death of pine trees on a Christmas tree farm due to a 2-day infestation, almost quick and sudden. Water damage to the walls and ceilings of the building as a result of gradual deterioration. All right, what is a casualty? All right, I want you to look at a couple other questions. Number 12. You got a building and you got equipment. You got bases, you got fair market value. You got insurance payment. Look at that building. What's her deductible casualty loss? First off, what is 10% of 50,000? 5,000, right? Plus 100. Already 5,100 is not deductible. So how much is deductible? The answer is B, 60,000. Where did it come from? You had 30 reduction fair market value, but you got 10 back. Here you got 100 back. Now look at the explanation. 150 minus 100 plus 20 minus 10 equals 60,000. All right, that's the answer B. That's a deductible casualty loss, but you'd have to take 5,100 out of that. 5,100. They didn't ask for that. Okay, that is chapter 8. Now, we're going to look at chapter 9. Read a couple of the true faults on chapter 9. This was employee business expense, education, home office, travel, entertainment. On Schedule C, if you're self-employed, these are for AGI. And if you look at number 3, they would be from AGI. So it makes number 3 false.
So the deduction goes from.
The what?
What was it? What's the only thing that's from AGI?
The only thing from AGI now is itemized deductions, because there are no personal exemptions anymore. I don't know how I feel about that yet. Might hurt me. But if I just look at it from a standard deduction, last year I got 6,000 for a standard deduction and 4,000 for exemption. That's 10. If I didn't itemize. Now this year, if I don't itemize, I get 12 standard. So I've gained 2,000. If I were in 25% tax bracket, sure, that helped me $500. But then if I itemize last year, it probably hurts me because I lost that $4,000 exemption. I don't think I itemized. I'm pretty sure I did. I have a lot of state income tax and then a lot of real estate tax, all that. But I've got a real house out of Cleveland, Tennessee, but I take that off of Schedule E, and I don't have to itemize to take the interest expense, insurance, and everything. Let's look at number Charisma, a CPA, paid the following expenses in pursuing her professional. She paid professional society dues, that'd be like the AICPA, tax and accounting terms. How much of these expenses can be deducted if she is an employee of an accounting firm? And how much is deductible if she is employed CPA? See, the answer is C. She gets to take 0 as an employee if she's employed with somebody else. But if she's self-employed, she gets to take the whole 700. Now, travel expenses. Read a couple of those true false. So this is false because I can drive to Charleston today and back today and get mileage. I can get, but this is if a self-employed individual. No, even if I Went to Charleston, they pick up tax forms back. I can take it all for my tax practice. Jason lives in New Jersey, owns several apartments in Baltimore. His travel expenses to Baltimore to expect a property are deductible. Sure. According to IRS, a person's tax home is location of the home resident regardless of the location of his principal place of work. That's false. You can make it somewhere else. It's his principal place of employment. All right, so my home would be West Virginia instead of Virginia. That don't affect me anywhere. Now look at number 7. Tessa has planned a 5-day trip to Miami with her husband. Before leaving, one of her partners asked her to take a morning meeting with a client while she is there. She can now deduct the cost of the airfare for the trip. That's false. Usually that's true. If that's her purpose for going down is to go to that meeting, the answer would be true. But she's just going to fill in for somebody. Let's look at a multiple choice here. Norman, a self-employed lawyer, travels to San Francisco for 4 days on vacation, and while there, spent another 2 days conducting business. All right, 2 days business, 4 days personal. All right. His plane fare for the trip was $500. Should he take all of that or not? What's the plane fare? The answer is A. All right. The meals, hotel 2 days, rental car 2 days. But the main part of his trip was vacation. That's why he didn't take in the plane fare. The main part of your trip was for vacation, no plane fare. If the main part was business, then you're going to take all the plane fare. That's something I don't think I brought out in the chapter. Okay, now we get down to another category, which is transportation expenses. Number 1, commuting to and from a job location is a deductible expense. False. I come up here from Richlands. I'm not in Richlands. I'm not in Claypool Hill. My address is Pounding Mill. The Pounding Mill covers a big old area. I live out in a place called Paint Lick. Now, the reason they call it Paint Lick, I can see from my back deck Paint Lick Mountain. Now, the reason they call that Paint Lick Mountain, I went up there one time. I walked up one time. It's a long way up. And one time I went up on a 4-wheeler. On Paint Lick Mountain, there are still authentic Indian paintings of deer, bear, Indian, eagle on those rocks. And they've lasted forever. So that's why it's called Paint Lick Mountain. Okay. If the standard mileage rate is used in the first year, the actual expense may not be used in future years. False. You can switch. Taxpayers may use the standard mileage expense with 5 vehicles when 5 vehicles are used simultaneously for business. No. When multiple vehicles are used, the standard mileage rate is only allowed when 4 or fewer vehicles are in service. I didn't know that. I didn't know the standard mileage rate was for 4 or fewer vehicles. Now remember, you're going to have plenty of time to look up these answers if you don't know them. So you're going to do well on this next test, hopefully. Entertainment. You have to look up some things on entertainment. A self-employed consultant takes a client to dinner for an engagement consulting. Assume appropriate documentation maintained. You'll receive a deduction of 50% of that entertainment. True. All right, so a whole lot of topics we're covering here. All right, look at number 7. Shane is a partner in a law firm. He makes these gifts. $30 to the partner, $40 to his assistant, 4 clients, $27 each. What amount can he deduct? The answer is 125. All right. $25 to the assistant and $25 to each client, because you can't give your partner a gift and deduct it. But now these gifts here are limited to $25. Your book clearly tells you that. All right, reimbursed. All right, number 2, an employee adopts a per diem policy for a hotel and meal for employees. Following the IRS tables, employees will no longer have to submit any documentation. False, they have to. Now, per diem, when I was at the community college and I took PBL students, if I were in DC, I might be reimbursed $35 or $40 a day for meals. But if I were somewhere in Virginia, West Virginia, let's say if I was in Beckley, West Virginia, I may only get $25 per meal. So per diem was different for different locations. All right, now moving expenses. Start out with number 2. Louisa, an active duty U.S. Air Force pilot, receives orders to transfer from Georgia to Fort Hood, Texas. It is a permanent transfer. John is a civilian employee of the U.S. Navy. He is transferred by the Navy from Norfolk to San Diego. Both individuals pay their own moving expense. Regarding their ability to deduct the moving expense, B, Louisa will be allowed a deduction, but John cannot deduct. Why? Louisa is an active duty Air Force pilot, but now John is a civilian employee of the Navy. Now, used to, John could take it too. Now John can't. All right, number 3, Camellia, an accountant, takes a new job 1,000 miles away from her current job. She has to pay a moving company plus the transportation cost for herself. After she submits all the receipts, the new employer reimburses her in full. She will treat the reimbursement and moving expense as follows. C, reimbursements included in income, moving expense. Reimbursement included in income, moving expense, no deduction allowed. I don't like that either. They've changed that. Okay, so there are some things that you're going to have on your test. Chapter 8, Chapter 9. Now we're going to look at the last chapter we tried to cover, which is Chapter 10. Okay, let's look at some depreciation for the next few minutes. Okay? All right. Clayton, can you read number 1? Yeah, can you read it? Can you see it?
I can see it.
Well, go ahead and read it.
On its tax return, the corporation will use the same depreciation,
Amortization.
amortization, and depletion methods using its financial statements issued to the shareholders.
Right. False. Now, I'm gonna tell you why. A corporation can use straight line depreciation for its stockholders, but they can use double decline balance for tax return. Or they may use MACRS. So that's why that's false. Jonathan, can you go ahead and read number 2?
Appreciable property, business, investment, and personal use assets.
False. I cannot depreciate my cell phone. I cannot depreciate my home computer unless I use it for business. Now, if I use that home computer for doing tax returns, I'll depreciate it, which I do. All right, Cole, go ahead and read number 3.
In order for an asset to be depreciated in the year of purchase, it must be placed in service for 4 years.
That's to be true. You got to put it in service. Now, a business can buy a ton of assets and store them in a warehouse. If they're not using them, they can't. Okay, that's a little bit about depreciation. All right, now we're going to look at number 8. Under MACRS, salvage value is not considered true. Number 11. MACRS recovered property includes tangible, personal, and real that is used in trade or business. True. Tangible property is like a machine or computer. Real property, you can depreciate buildings and houses, but you cannot depreciate land. Intangible assets are not MACRS depreciation. It is amortization. I had 4 international students in my night accounting class last night. I asked them to pronounce that word. They pronounced it just like the other students who were born and raised in West Virginia, amortization. Now, it may be proper in some places to call it amortization. I put an MER in there somehow or another, amortization. That's the way I pronounce it, and always seen it and heard it pronounced, amortization. Now, Section 179 expense is available for property purchased during the year. True. Purchased during the year. Section 179 are recaptured if at any time an asset is converted to personal use. True. If you quit using that asset, you lose some of that 179 deduction, which we said was over $1 million the other day. All right, at least 50% of the aggregate base of all new property for the tax year is placed in service during the last 3 months of the year. Mid-quarter convention is required. False at only 40%. This is 40%, not 50%. The mid-quarter convention applies to personal and real property. Never personal property. Never. All right, there's a little bit about depreciation there. The straight line method may be elected for depreciating tangible personal property placed in service after 9. You can use straight line. It's an option. It's called alternate. Now, if a new luxury automobile is used 100% for business and placed in service in 18, the maximum MRCS depreciation on the vehicle for 18 is $18,000. That's true. Maximum. You can look at that table in your book. So you'll find those pretty quick. Now, I'm just going to let you take a minute and read 36 and 37 on your own. I don't know how fast you read. Has everybody read that? How fast do you read, Jonathan? Have you learned to scan read or what? You learned just to scan it real fast?
But, I don't understand how the back. So,
I know when I had to do a book report in high school, I'd read the first 5 pages, the last 5 pages, and a couple pages in the middle. Did you do that?
get that whole, got in trouble. I took a test, everything on the test, nothing that I read.
So that one, you had a test on the book and you didn't read it. Well, that'd be different. I just had to give a book report.
I read like the first 10 pages, the middle 10, the last 10. I think I got probably 5 out of 30 right.
The test was on the whole book. Oh, well. Couple more here. Never seen that name before. For Greek, whatever purchase of place and service, personal property costs $2 million something. The taxpayer plans to apply to section 179, but not bonus. What's the maximum 179 that he can deduct, ignore any taxable income limitation? C. Where in the heck did you get C from? All right, you take the purchase price minus $2.5 million, limitation on personal property, place and service. Equals 21,000 reduction in section 179. Yeah, you can see the 21. And then you take the 21,000 on the million allowed, and you get 979. That's a crazy way to do it. So if you exceed the limit, it reduces your 179 deduction. All right, one last one, folks. I'm going to get you out of here. And a 50-minute class instead of an hour and 15 minutes. So I can take a break and be ready for this interview, I guess is what it is. Number 46, which statement regarding 179 is true? B, amounts of the 179 election in excess of the taxable income limitation are carried forward. 47, a client placed 3 new business assets into service. Yes, a high taxable income would like to maximize the deduction by using bonus depreciation. All the following assets will qualify for that bonus depreciation, except C, which is a garage for the service vans. I'd have to look up and see why that is. Okay, folks, I'm going to let you go today, and I'll see you when? Thursday at 10 o'clock. I'll be here because I'm going to get in my grades early Friday.
He knows you.